Good afternoon. It's Saturday, September 13th, 2025. This is Robert Sin at CEO Technician on X at Goldfinger on co.ca. And you're watching Goldfinger Capital on YouTube. You can also find me on Substack at Goldfinger Capital. We're doing something a little different this weekend. Very short, concise videos, getting to the point, and then out, right? So we're going to get right into it. Start with the Fed meeting this week. Announcement will be Wednesday afternoon at 2 o'clock, followed by a chairman's press conference. There is some talk of a 50 basis point cut. The Fed fund futures think there's like an 8% probability. I say no, 99% chance that it will be 25. They won't go 50 because that could cause stocks to go parabolic even more than they already are. It could cause gold to spike $100. The dollar fall through support at 96. It would indicate and be an admission of a major Fed policy error. I don't think they go 50. They go 25. They give strong indications and signal that they're going to cut at the final two meetings of the year and probably going to cut down to 3.5%, which is the neutral rate by early next year. I think that's going to be the outcome of this Fed meeting. There could be some potential for some profit taking, some sell on the news. Maybe gold dips if they only do 25. I'm not sure. I don't have a high conviction on that. The bull case for gold here is just so freaking compelling. Yes, it could be too far too fast, but pull out the gold chart, whether it's daily or weekly. We had a 4-month consolidation from April through August. We're only 3 weeks into this breakout. From that consolidation, the chart tells me it could go to 3,800, maybe even as high as 4,000 in the next couple of months. And yes, I think it is a once in a lifetime gold bull market. So if we do get a correction, if we do get a pullback on a less dovish Fed next week, yeah, it could last for 3, 4, 5 trading sessions, but I believe the dip will be bought. And just like every dip has been bought in this bull market run in 2024 and 2025. Does anybody remember DOGE and how we're going to cut the deficit by $1 trillion by 2028? Remember, we're going to find all this waste, fraud, and abuse in the federal government? Yeah, I haven't heard about it since April or May. And so it's ancient history. And this chart tells a story. The U.S. budget deficit is on track to be larger than in any of the post-pandemic years. So you see the trend here, 2023 bigger than 2022. Deficit in 2024 is bigger than 2023. And 2025 is on track to be bigger than 2024. A near record budget deficit above $2.5 trillion here in 2025. It's not as big as 2020. I know. Right, that was an extraordinary year, but you get the picture. Nothing stops this train, to quote Lynn Alden. Doesn't matter who's president, which party is in power in Washington. Nobody wants to cut spending. It's not popular. So nothing stops this train. $38 trillion U.S. government debt, over $1 trillion in annual expense just to pay the interest on the debt, right? $1 trillion plus a year just in interest on the debt. That's more than is allocated to the Pentagon every year, right? Big, big numbers. And nothing stops this train until there's a devaluation of the dollar, debt jubilee of some sort. That's the end game. And that's why you have to own hard assets like gold and silver. Did anybody notice the gold copper ratio closed at an all-time high on Friday, right? I was flipping through some ratio charts and I saw this one. Wow. This is an impressive breakout. That's actually a triple top going back 50 years. It's a breakout above a triple top in the gold copper ratio. So what does that tell you? Well, it tells you that gold is getting more valuable in copper terms. It also kind of tells me that copper's out of favor right now. Suddenly copper has become out of favor. I don't think you necessarily short gold and buy copper here, but maybe you allocate a bit more to copper, because I think the bullish case on copper is still very compelling. Maybe shift some profits from gold miners or silver miners to copper miners. I don't know. That's just an idea. This is a once in a lifetime bull market in gold. And these stats just help to affirm that we're nowhere near a top or a bubble in this thing. According to Bank of America Merrill Lynch survey of institutional fund managers, 41% of them have zero gold exposure. 2 out of 5 have zero gold exposure. The weighted average portfolio exposure to gold among these fund managers is barely more than 2%, right? 2.2% average weighted portfolio exposure. That means to me that tells me they just want to be able to say they're long gold, but their exposure to gold is not meaningful. They can go on CNBC and say, we own gold, but it's not a meaningful amount of gold ownership. Gold goes up 50%. Their portfolio NAV only goes up 1%, right? It's not meaningful. This number has to get up to double digits for me to even consider that we're getting near to a top, right? A recession would be rocket fuel for gold, quite frankly. The Fed has a long way to cut rates. The Fed could restart QE in 2026 to help combat a recession. The potential for stagflation is there, considering that we were still running a $2 trillion deficit during the good times. Can you imagine what the budget deficit is going to be during the bad times if the bad times are coming? Also, obviously, the Fed will cut even further than 3.5% if we are indeed in a recession, right? And QE could definitely come about if it gets bad and we get close to deflation again. The Fed will do even more than they did in 2020. Can you imagine what happens to gold and silver if the Fed does more stimulus, more QE than they did in 2020, right? Think about that, right? So while we could say, yeah, the gold chart looks pretty extended. Some of these miners are really extended. Yeah, I mean, we could see some near-term pullback, but bigger picture, nothing stops this train. And then just to throw a little more confirmation bias at you, this analog chart says we're in 1977. So this is more in the stagflation camp, that we could just be about to see a U-turn higher in inflation at a time while the economy is stagnating or deteriorating further, right? Extremely bullish for gold if that's the case, right? And if we do get this, where inflation starts to creep up again, the Fed is cutting interest rates and maybe restarting QE, well, short end yields drop, long end yields rise. That's called a bear steepening in the yield curve, and puts us right in the sweet spot of a bear steepening commodities boom, right? So I want to be long oil, I want to be long copper, I might even want to be long zinc or nickel, right? And so turning to this chart very quickly, notice how OIH, the oil services, is in an uptrend at a time where oil is in a downtrend and very much out of favor. I see this as a bullish divergence. I'm long OIH, and actually I'm becoming more positive on crude oil here as well. Okay. Tether gold, read about that. The tokenization of gold is here. That's another big potential bid into the physical gold market. The brand recognition of Tether is making this actually happen. People have been trying to tokenize gold for a decade. It's actually working. It's actually here now. Another chart to put on your radar is Cameco high and tight bullish consolidation. Seasonality is very favorable for Cameco in November. Final 2 months of the year is bullish for CCJ going back many, many years. Look for a swing trade in this one in October for a breakout move, maybe up to $100 a share by year end. And also, pure play copper miner, Southern Copper. Remember, I said maybe we need to actually start to like copper more now. This chart is pretty bullish. So even though copper is not really trading all that great, this chart is in an uptrend, right? So maybe we need to raise our exposure to copper miners, maybe shift a little bit of those gold, silver profits over to copper, just a little portfolio rebalancing. So again, to reiterate, Fed only does 25 on Wednesday. Get ready for huge volumes next week, especially on Friday. And remember, bull market transforms fools into prophets, but only temporarily. We have to be aware of confirmation bias, greed, and the tendency in bull markets to want to take too much risk at exactly the wrong time. Chase stocks at 52-week highs, chase the popular stocks everybody's talking about, and be impulsive, because as human beings, we have a tendency to give into greed. So just don't do it. Just don't do it. Take a cold shower, go read a book, go for a walk, do some research, be patient, wait for the good spots, the good entries, right? That's how you make money in markets, not giving in to impulses and fleeting emotions of fear and greed. Thanks for tuning in. If you enjoyed this video, please hit the like and subscribe button, and have a powerful trading week.